Hello, welcome to the Market Ladder. I'm Joel, I'm the Chief Market Technician here, and today we're going to talk about the June edition of the Ladder Update. So we're going to talk about the market condition as well as last month's trades and talk a little bit about current positions and new orders. Before I get started, there's a risk disclaimer. I am not a financial advisor, and investing in the stock market is inherently dangerous, so please take any trades at your own risk. Thank you. All right, so we've got a lot to talk about, so let's get started. I usually like to start with the S&P 500 on a weekly chart. So every candlestick that you see here, whether it's this one or this one or this one, is a weekly indication of the S&P 500 weekly price action. And if you look, you can see a large bowl pattern here with another smaller handle or bowl right here. This is commonly referred to as a cup and handle, and it's a very bullish formation. And so once you break out of this upper green area here, you usually have good selling from there, which we've had. So if you look at the midpoint here, or the top of that cup, yeah, so it went down about 24.5%, and since then it's gone up about 16%. So you could say that it's got more leg to room just based on that pattern alone, but I think everything else in this presentation will show you that I'm a bit bullish or bearish. In other words, I think the market's going to go down from here, if not immediately, then very soon. And we'll talk about why. So one of those reasons is that it's gone up. The market has gone up, and this is the S&P 500. It's gone up over 30% since last November. And if you remember, the stock market will go up about 10% on average per year. So if you get 20% in a year, it's a good year. If you get 30% in a year, it's a very good year. So we're already at 31%. And we're also entering into the summer months, which are typical slowdowns. So I don't see the market going up much from here. I see it making another pullback of maybe 5% or more in the very near future. All right, so here's that was the S&P 500. So this is a chart of the NASDAQ. So you'll also hear that for reporting how the stock market is doing. So the S&P 500 is 500 big companies, largest U.S. companies, but the NASDAQ is also a representation of big companies, but they tend to focus more on technology stocks. So they will typically have more gains than the S&P 500, but they'll also have more losses when the stock market starts to go down. So this is a very similar pattern that we saw with the S&P 500. It broke out here, and it's been up ever since. And in this case, since the October-November lows, it's gone up 35%, whereas the S&P 500 went up 31%. So very similar nature, and that's what we would expect. Again, it's gone up 35%. So trying to get more out of the stock market at this point in time is definitely a little risky, and it's kind of like trying to squeeze water out of a rock at this point, in my opinion. All right, so we talked about how long it's gone up and how far it's gone up. So then what I like to do is to try to find, how fragile is this market top, or how robust is it? And so one of the things we look at is called market breadth. And that means even though the overall indexes are going up, how is the other aspects of the market? Is everybody participating, or is it just some of the big technology stocks? So that's what we try to dig a little bit deeper and see how the other smaller stocks are doing. And so at the very top here, this is just the S&P 500 again, and it's just squashed down. And so this is on a daily reporting. And then this one right here this is the New York Stock Exchange. And this indicates advanced issues minus declining issues, and they just add them up and subtract out the ones that go down for the day. And so if you look, probably, I don't know if you can see, yeah. So almost middle of May till now, you can see how the S&P 500 continued to go up, but the New York Stock Exchange actually had more declining issues than advancing issues. So that's one of the things we look at to determine how strong this uptrend is and how much more legs it has. The next thing is the declining volume. So what it does in this case, it just looks at on the up volume, or when a stock went up for the day, it adds it takes that as up volume, and if a stock went down for the day, it considers that down volume. So it just tallies the up volume minus the down volume, and it creates this chart right here. And you can see this one isn't as dramatic, but it is starting to decline a little bit. So that would kind of coincide with the New York Stock Exchange advanced minus declining issues, and the volume is starting to go down as well. And so the last thing I like to look at least on this chart, is the NASDAQ up volume minus declining volume, and it still looks healthy. And again, the NASDAQ is the technology stocks. So with the technology stocks, they're still plowing ahead. So the next thing I'm going to show you is an equal weighted index. And so what this means is that at the top of the chart, again, is the S&P 500. And you can see how it's still continuing to climb. I put that blue bar on top so you can easily see the divergence that we're seeing here. And so this chart here is the equal weighted S&P 500. And what that means is that they take every stock in the S&P 500 and they equally weight them into the index. And so when they do that, some of the stocks aren't doing so well. And you can see this divergence here where the S&P 500, the common stock market, is going up. But if you equally weight every stock in the index and then put a graph about how it's doing, it's starting to decline. So yes, the stock market's still going up, but the breadth is not looking good. And I worry about that because of how far it's already gone. And so that's what we look at, the breadth of a uptrend or a long running stock market. And so again, just to explain this, this is the S&P 500, and the big companies have higher weighting in this chart than the ones below. Everybody down here is equally weighted, and they're weighted by their market cap, and that's just volume times outstanding shares. And so you don't really have to understand that. The thing to understand is that the big companies, and I mean like the really big companies that you've already heard of, such as Microsoft, Apple, Amazon, those ones carry more weight and they have more impact on this index than the ones down here do. And so, again, the little guys or the smaller players aren't doing as well as the big players are. All right, so last chart talking about market breadth is the New York Stock percent above SMA 50. So SMA 50 is a moving average, and that's an important line for a lot of technical traders, and a lot of even people that institutional traders will look at this. And so when you get a lot of stocks below the SMA 500, then it can show you that there's weakness in the market. So this is this is just the S&P 500 on top, and you can see that same line on top. But down here you can see that divergence again. So you can see that the percent of stocks that are above this SMA 50 line is declining. And what I like to do is I like to put a line right here, this yellow line. This is a 50, or kind of a midpoint. When I see this moving average, and that's all these two lines are here, is kind of a moving average of this index. When I see that moving average dip below the 50 line, that's when it's a cautionary tale, and the market trend is probably about to expire. So we're getting pretty close to that. You can see how it just dipped to the 50 here, and it's not really rising much above the 50 now, and you can see it could easily dip below the 50 again pretty soon. So that's something I'm paying close attention to. Overall, the market breadth is not very good, and it's a concern. So in summary, the market is getting overextended and the breadth is starting to deteriorate. So I would anticipate that, again, that the stock market overall will pull back here. If not in the next couple weeks, probably in the next month or so. And price action, though, is still above all the important moving averages. And we talked about the SMA 50 just now, but there's also the SMA 200 you might have heard of. Some people look at the SMA 20. So it's still doing well in that respect. So it's still a bullish market, but to me, it's an old bullish market that's about to probably have a pullback. So that's why I say the overall market condition is yellow. And it wouldn't take much more bearish for me to see to turn that to a red. But right now it's yellow. And so that just means we need to be very careful about the ETFs that we take and where we put our money into. We may start considering inverse ETFs that go down or actually go up when the market goes down. All right, so having said all that, let's look at last month's trades. And this is a summary, so this just means what trades closed out during the month of May. And so current positions aren't included on this, or if they closed out early June, I did not include those. So we'll do another June portfolio or trades performance for the next month. But let's just quickly go through this. You can see we had, a lot of winners here. We had a couple of losers here. But overall, it was a very good. And you can see my monthly performance goal is 4 to 5%. If we can get 5% a month, that would mean we're getting 60% a year, which is outstanding. You may know that my annual goal is to get 50% in a year. And so that's why I said a monthly performance goal of 5%. So if I can get that, I'm, on 3 out of 4 months, then I'm well on my way to getting the 50% in a year. So overall, the portfolio loss gain was 7.5%. If you had taken every single trade at a full size or 25% of your trading portfolio, then you should come out with a number very close to this 7.5% for the month of May. Of course, there's no guarantees, and there's always risk, and you may certainly lose money. So I have to put that in there as well. All right, so let's look at the current positions for what we're looking at that you may be holding right now. And if you've been following along, you should have most or all of these in your trading portfolio. Nugget, we just got that filled, I believe it was last Friday. We did fill a half size, and we are not filling another half size because it looks so volatile at the moment. So we're just going to keep that one as is. The TMF, or talk to each one individually. TMF is above a breakout, and it's kind of it's still sitting right there, so we're happy with that one. And then MSOS is a ETF that tracks the U.S. cannabis market, and it's consolidating right now at a support or a bottom, so we're still good with that one. And then SOXS is one that's also is hovering around a market bottom or a support. So and this one actually goes up if the semiconductors go down. So we're actually taking an inverse trade. And again, I talked about how the market is yellow, and it's really borderline, orange, if you will. So that's why I've put in one of these inverse trades. We've already taken half of our profit out, and we've still got half of a size still in there. So we'll see how that goes for us. And then there's here's the new trades. So these have just been put onto the website, and because we've actually got 3 full-size trades right now, and because we've sort of slated that we will go with no more than 4 full-size trades. And so what I did is I just put both of these out here, and we have buy half at 43.6 and half at this price, and so forth for the yen. So because we've got now a potential of 5 full-size trades, what we'll do is go ahead and just enter half at 43.6 if you'd like to take the COPEX trade, and then half at the 22.8 if you'd like to take the yen trade. And what I would guess is that one of these will get filled before the other one, and what I'll probably do is cancel the other trade, and then we'll just continue on with whichever one fills first. That's my intention at this point. We'll continue to monitor it, and I'll continue to give guidance on that as it continues. All right, so that's it. In summary, the market is yellow. We need to proceed with caution. We had May's returns of 7.5%, which were very good, and a lot of trades in progress, so be sure to check in daily with what's going on and get your stops set. And that's it. I hope you've enjoyed this video. As always, thanks for watching, and as an old Star Wars fan may say, may the trades be with us. Thanks a lot. Bye for now.